Hello everyone, everything is good and ever under everyone control. So today we are going to discuss, it's a full course actually. We're gonna discuss the inducement cycle, daily bias, advance, premium and discount, and the price action correlation between the markets. Alright, so let's just get started. So first of all, what is the inducement cycle? How we can find inducement cycle? What is the inducement first of all? Okay. Inducement is liquidity, okay? But it's not any liquidity, it's a specific liquidity. We think that the price is gonna take it and revert from it. Okay, that what is inducement, and not the difference between actual inducement and the liquidity. It's just a high, a specific high or low. There is a high probability chance that high or that low in the market, price gonna take it, grab it, and there is a high probability chance price gonna reverse directly. So that the difference between inducement and normal liquidity. Liquidity price can just take it and continue in pushing lower. So how to identify the inducement? So to identify the inducement, we should first of all understand what is the inducement cycle. And to understand the inducement cycle, we should understand something. We should understand that we have super major type of liquidity or inducement, super major type of inducement, major and medium and minor. Okay, we have this four types of liquidity, you could call it, or inducement. So what is inducement again? Is the liquidity that price grab it and reverse, just that simple. So we have the super major, we have the major, we have the medium, we have the minor. So what is this types of liquidity? Super major, anything you have in the 3 months time frame. Why I call it super major type of liquidity? Okay, why it's super major type of liquidity? Because when the price grab is a 3 months high or low, there is always a reaction. First of all, previous candle of the 3 months time frame, if the price go and grab the high of it, it will make and gonna continue pushing or reversing lower, that gonna create a super major movement. Okay, super movements, crazy amounts of pips, crazy down movement. So that's why we call this one a super major, because there is high data above this high, a lot of cash, a lot of money, a lot of transaction, a lot of orders, whatever you want to call it. Okay, the major type, so this one is anything on the 3 months minimum and above it. The major is anything you have less than the 3 months. So minimum the daily. So daily, all right. So the major is anything on the daily, weekly, monthly. Okay. That what a major type of liquidity. Of course, major type of liquidity mean again, price is gonna create a major movement, not of course super major, but just a major movement. Very interesting, very easy, very simple. A medium type of liquidity, anything we have on the hourly time frame. So 4-hour time frame, 2-hour time frame, 6-hour time frame, 9-hour time frame. I don't give a shit. It's just a medium type of liquidity. Okay, just a medium. Fair value gap on the 4-hour time frame or anything on the hourly time frame, 2-hour, 1 hour, 90 minutes, 30 minutes, 15 minutes, the minimum 15 minutes is just a medium type of liquidity. The minor, anything you see or you have on the 5 minutes, 4 minutes, 3 minutes, 1 minute, someone trade the second time frame, I don't know. Anything here is just minor type of liquidity. Minor type of liquidity mean 2, 3, 4, 20 pips maximum movements. So that was a minor type of liquidity means. Why you should understand types of liquidity first? Why did I told you this? To understand the inducements of the cycle of inducements, because this is the first basic simple shit you should understand. So cycle of inducement is simply we're saying that any market condition, if you read a little bit Wyckoff theory or auction market theory or market maker theory or whatever you call it, this shit, alright, it's the same. It's just a Dow theory in the end. Price make accumulation, reaccumulation stuff. So it's just a trend, alright? It's just a trend. It's just impulse movement, sideways movements, impulse movements. What is this? For us, we're saying price grab at the beginning of the trend, super major low. All right, go and grab super major low, and this super major after that, it go and start creating or start taking out measures, 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 measures. And on this impulse movement on the lower time frame is where the price start following just the medium types of liquidity, which is 4-hour imbalance, like example, 30-minute imbalance. So price creates super major protected low, then start creating major protected low, then start creating another major protected low. And on this impulse movement here, price creating the medium type of liquidity, and that was showing actually the fair value gap. It was showing that the buyers are in a total control and the trend still bullish. Of course, in the left you're gonna see some super major type of liquidity. How you can know price gonna reverse here? How you can know, or when I can know when the price gonna end the trend? We see everything later. Okay, so simply that's what is inducement cycle. Okay, that's exactly what is inducement cycle, and that theory happened from the higher time frame to the lower time frame. Again, on the medium price go, like example, to grabbing a medium low in the session higher low, New York session, London session. At the same day, of course, higher low of it is just a medium type of liquidity. All right, so if there is no major protected low here and price go grab a medium, some people, some traders actually go and start marking the highs and the lows of certain sessions highs, New York highs, New York low, waiting price to grab it, stuff like this, and there is no protected major low, and that's stupid. That when exactly the market just grab it, fake reaction, and go take this shit after, right? Continue pushing lower. For us, if there is a major protected low and the cycle of inducement is bullish, then I can understand that the price gonna continue pushing higher after grabbing a medium type of liquidity. And after price grabbing a medium type of liquidity, then we can move to the 5-minute and the 1-minute time frame and start trying to find some minor stuff, because we understand the price always creates a major low protected, a medium low protected, then start following the minor low protected. Okay, so create first of all the major, then the medium and the minor. And the minor time frame, there is a lot of manipulation, a lot of build-ups, a lot of fake lows and highs, because it's a fast time frame. Of course, the price moves faster and every candle is so fast. It's not like the higher time frame, which is much more powerful and easy to read. So this method of cycle, I think, on the examples here is simple. We're gonna right now follow or try to understand quickly the basic idea. What is a daily bias? We're gonna use the fractal model, because in the end it's the same, as we already explained the market structure before, is the same thing, but fractal model actually is much more simple or much more easy to understand. Can I go to the chart? I think it's much more better there. So gonna go to the chart and try to see some things. Okay, the gold chart. So fractal model easily is telling you, let's go like this. Like example here, we have some protected highs here. I'm gonna discuss that later. This is a protected high, this is a protected high, whatever. So here the price is totally surge and it's total control. So this low here you see here, or some people seeing this as a demand zone, or I don't know stuff. This is just a trap zone, this is just a fake reaction, whatever. So fractal model, if price go and grab the previous candle high, fail to close above it. Fail to close, what is this actually? It's a fair value gap in the lower time frame, which is mean it's just a distribution and panic down fucking movement, showing that some people entered there and they want to protect their order. So that's exactly the logic behind this, to just not follow a pattern. I want you to follow the logic so you can understand the market in any condition. Price failed to close above this one, means it's a fair value gap in the lower time frame. So this one, which type of liquidity is this? This is a major type of liquidity, right? Orange is always major. Major type of liquidity, daily time frame. Go grab the previous day, which day is this? Tuesday, Monday. So this is probably the high of the week. When you have something like this, you're saying that the next day probably should just make a candle like this. Some people gonna ask me or gonna say, all right, price could just open and go, take out this low and reverse, going higher. Gonna discuss that later. Price here gonna go totally down. That's exactly what happened. Same thing for the next candle. Gonna do the same shit. Gonna say that the price should really go down. Boom. Same shit for this candle. Why I say price should go down? Because this candle closed below the previous candle. So mean the sellers are in control, and this candle closed below the previous candle, mean the sellers are in control. Say for this one. But right now I can see price really fell to close below this one. Alright, so I could say, or I still saying that this low here should price really take it. This one really here. So I'm not gonna trust it too much, but right now just explain it. So when the price fell to close below the previous one, we're saying price could just expand higher. Let's see. Never do so because that's the final target of this cycle here. Okay. So what is a cycle of inducements again? Let's go to the monthly time frame. As I can see, price really go and grab this previous month high. Okay. So when price grab the previous month high, which is a major type of liquidity always, we're gonna use the daily time frame as a confluence. All right. When price grab previous month high, we're gonna use the daily. What I want to see on the daily time frame, I want to see a candle. All right. Keep this in your mind. When price just go and grab a monthly low or monthly high, you're gonna use the daily time frame. Okay, we align the monthly with the daily. What do I want to see on the daily time frame? We want to see a candle fell to close below the previous candle after the price grab this month. So this is the low of this month. Price grab it here. I want to see a candle fell to close below the previous candle. Okay, because that's showing you that the buyers enter into the market and they want maybe create the low of the month here to take the price higher. That's exactly what happened actually here. This is just a gap. This candle fails to close actually above this candle. How I see this, because this is just a gap. If you take this candle and replace it to this place here, you're gonna see this crazy shadow here. So this one really fell to close above the previous one. Okay. And that's showing some aggressive sellers enter really on this area, which is a very interesting area. High transfer place here. So, and create actually a fair value gap of the daily time frame. Okay. So that's showing a total control of the sellers in the market. Then price, of course, start creating this fake stuff here because making a fake reaction from this level here in the left, as you can see. And price go totally down. Let's remove everything and start from the beginning again. What did we say? We're still following, or we're still trying to explain, of course. The previous 3 months low is this one. This is super major type of liquidity. Price right now just grab some monthly lows, which is a type of build-ups, as you can see. We're gonna discuss the build-ups later. So right now this is a monthly low. This is a monthly key level, right? Monthly key level. Why did I mark a monthly key level exactly? And I marked the super. This is monthly key level, and this is a super major type of liquidity. So this is a major type. This is a super major type. This is a super. So price came from what? Price come from this high here, really. Okay. Price come from this high here, really. Not this one. All right. Yeah, discuss that later. What's going on here? Price come from this one. Okay, I wanted to focus on me here. This place here. Okay, because price just grab it and go down faster to this low. So price come from a monthly high, okay, to this monthly low here. From this monthly key level high to this monthly key level low. What should I find? What should I see? I should find or see. What did I found here? It's the same. I'm gonna try to find here. It's the same shit. Price just open with the gap. Totally down. You see this candle really close. You're gonna say, all right, this candle actually closed. It does not close. If you imagine like there is no gap here, okay? Imagine because that gap there is no transfer, there is no money, there is no shit, there is no order that caused the price to go down, okay? Just the algorithm, total algorithm that are controlling these gaps here. Okay, so if I take this one and replace it here, this candle really with this crazy shadow fell to close below the previous candle. So that's showing me or telling me there is a high probability chance, and that goes with this key level, there is a high probability chance price should just go higher. All right. What I'm gonna do, I'm gonna expect, or I'm gonna say, if the next candle just open and go to the low first, that's showing me because any candle that is open, high, low, go high and close. So open manipulation first. She's gonna create the low of the day. Then it should go higher. Which day is this? Monday. Next day is the Tuesdays. I'm gonna use the weekly cycle. Probably this low is the low of the week. Still, we have a chance price could just go and take out this low. I don't really care about it, but just expectation. I'm not expect the price to go higher too. Price make nothing. Make just accumulation on Tuesday. Very low volume day. Still expecting the same. Still saying this low probably is protected and I want to see price going higher. Alright. Still gonna expect the same, of course. I'm gonna expect the price to continue pushing higher. Where I'm gonna expect the price to go actually? I'm gonna expect the price actually to on the weekly time frame. Let's see. Okay, I'm gonna expect the price, of course, to go to a monthly level. Okay. Sit on this month, so I'm gonna minimum target this level here as a weekly level. Okay, and I'm gonna tell you later why when I'm gonna start explaining to you the advanced premium discount. So that's exactly how we read actually the daily bias. Okay, so if the candle closed, if this candle closed below the previous candle, I'm gonna expect this candle to be bearish like this candle. Same for this, same for this. This is a totally bearish trend. If this candle fell to close below the previous candle, then we're gonna expect the next candle to go higher. Okay. So this candle start rejects a little bit, but still closing actually, but it's not the best close actually. So I could expect price maybe it could just go and grab some major type of liquidity because right now price grab cycle of inducement price grab monthly. Price could just grab this daily stuff and then just go continue pushing higher. That of course that's exactly what happened and start going higher. Yeah. So price when the price start grabbing some monthly highs, low, any type of liquidity like this, you must use the liquidity you find on the daily. Okay, so that's the cycle of inducement, creating a protected measure on the monthly, daily protected measure lows. Then on the lower time frame here, of course, you're gonna just start using the 4 hour and the 1 hour and the 90-minute cycle, so you can find some. So that's exactly how the cycle of inducement. And on the totally on the whole trend, I'm not gonna expect any fucking sell and expect a full control of buyers. I have one mind, okay, get the queen and gonna just focus on the buys. I'm not gonna expect any sell opportunity at all. Okay, I don't sit 100 million position or expectation in my mind. Price retrace, go into a gap, daily gap. Still expecting price to continue pushing higher. This candle closed above the previous candle, so next candle close above the previous candle. This candle really go grab some highs here, showing some interest, and close below this candle. But I guess it's still fake. Okay, still fake. Price is just accumulating and continue pushing higher from this daily beautiful key level. Bum, 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 bum. This candle closed above the previous candle. This candle really grabbed the previous candle low, fell to close below it and create this bullish candle. So a new perfect place to expect the next candle to just open, manipulate and go higher. Something like this. Even this low is not the best, to be honest. Okay, price start manipulating a little bit. Grab new major type of review. Tuesday is this Monday. So new low of the week. New low of the week. Let's see. Bullish, of course, totally. I don't really like this low here. It's not my favorite. But I'm still expecting price. I'm following the trend. And I'm still expecting the next candle to open, manipulate and go higher here. So right now what do I have? I have a monthly major protected low, just induce this monthly key level. I have major protected daily lows, major protected daily lows. At price is totally bullish. So when I am this place like this, I already have the major protected lows. I'm gonna just use the fib at this position. So I will use the fib. If you have, if you have a candle like this and just goes and grab the previous candle low, and the shadow is much more huge than the body of the candle, you can just draw your fib from this low to this one, okay? And you want to find out your buy opportunity at the premium of this candle, actually, okay? If the price goes deeply to this candle, to this discount level, what is the logic behind this? The logic is this discount level below this 50% is the orders of the institutions. So if the price really go back to this place, that means that those orders are not in control to take the price higher. So that means that this candle here is fake. All right, it's a fake candle. Call it a C2 candle or whatever you're calling it. And the price is gonna probably continue pushing lower or keep a sideways range. So price must respect the premium of the range that you should buy on the premium of the range on that discount, because you can never buy on the discounts, okay? So that's the logic. And if you have a totally bullish candle like this, you're gonna draw the fib like that on the whole candle. And the next day, you should wait the price on this premium of this range to take a buy position. It should not go below this equilibrium level or close below this equilibrium level you see here, because the non-supporting price will go higher. So in this candle, I can see the shadow is crazy. So it's a totally bullish candle. I'm gonna draw my fib like this. Okay. This candle, I'm gonna draw my fib from this low to this high. So next candle, let's see. Next candle goes, as you can see, opens here and grab this high first, actually. Okay, start grabbing this high first. Show us some retracements, probably some retracements on the chart or something. Okay, it fails to close above this high. So price still ranging actually on this level. Entry exit with this gap and still ranging on this level. I'm gonna scalp or do something on this place. If the price here again, I'm gonna draw my fib from this high to this low. If the price on this place stay on this discount place, which is the lower half, I'm gonna try to take a short sell opportunity to target this fair value gap here. But if the price just open and go check out this major type of liquidity first, that means this is probably the manipulation and the price wanna just continue pushing higher. So that's exactly how I can know or predict the market environment. Price open, you can see deep down into the range, so you can take really short sell, price go down. Still keeping it the same. The next day too. Next day, what happened? Price open here, okay. Price open here really, and go grab the previous day low, which is a major type of liquidity, and fell to close. So I'm gonna do the same, draw my fib from this low to this high, saying that the cycle of inducement the next candle must just open here, stand above the equilibrium of this range and go higher. What should I find here actually on the lower time frame? Right now price grab a major type of liquidity, so I must just find some medium levels on the 4 hour, 2 hour, 1 hour, 90 minute, 30 minute time frame. I must find some medium levels above this equilibrium of this range, and when the price hit those levels, I can just try to go with my bias, try to go with a buy opportunity. Next week, Monday, price open with a huge gap and grab again. This lows, same shit. Gonna do the same shit. Draw my fib like this on the wake of this candle, saying the next candle should open, stay above this equilibrium and go higher like this. Let's see that happen. Never do so. Why? Because price open, as you can see, and go to this major liquidity first. So that's showing what? What did I told you? What did I just explain to you? So you have a candle like this, like example. Okay, you have a candle like on any time frame, it's the same shit to happen. You draw your fib like this from the low of the candle, like example, to the high of the candle. The next candle, price is bullish. This candle closed above the previous candle and it's totally bullish. So that means the buyers in control. So the next candle must just open here, stay above this equilibrium of that shit, and go higher. But if that fucking candle just open and go take out the high of this previous candle and reject and do some shit, that's showing you that those buyers are now in a powerful position to control the market to go higher. Because if they are in a powerful position, we should apply the theory of AMD, actually classic theory, accumulation, manipulation, distribution. Price just open, manipulate, and go higher faster. Okay, remember this word, faster. No accumulating or staying at this. No, it should just open, manipulate, go faster. Because there is a huge fucking volume here supporting the price. Alright, supporting the price to go higher. Alright, so that's exactly what I want to see. But if the price just open and go to those highs, that's showing that some sellers are interested on these levels and there is some fight there. So that's exactly what happened here. Price here open and go take out a major type of liquidity. So if price grab a major type of liquidity and create on the lower time frame, grab a major and create a medium type of liquidity, hourly imbalance or something, that's showing that some people entered there. Alright, and I'm gonna be interested to short some sales there. Just that simple. And that means that this candle here is fake. Or those buyers here are not in control anymore. They are not in control. New people enter to the market. It's just that simple, okay? It's the same for all the markets. It's the same for all the environments. It's the same shit you can apply. See the next candle? See? Price stay at this equilibrium actually. Boom. Going lower. So that means that sellers are in control. Why? Because this candle go to this equilibrium. Go above it a little bit. I want to sell here actually. And reject it and respect this go of this red. So what did I told you? On the premium. Who entered on this premium? Who entered here? Big boys. They have some orders here. They protect these orders. Forget this mitigation stuff you learn on the SMC shit. There is no mitigation in this market. Just fake stuff you learn. I protect these orders, okay? So to protect these orders, the price must stay here. Price stayed here and got totally bearish to this low. Did the price close? It did. Should I expect a buy or sell? Expecting a short sell. Till price showed me a buy. Can you see this candle open here and go to the low? Okay, complete the mission, then the reversal happen. So right now I can expect a short buy, of course. That's exactly what I thought that shit was going to explain it for 5 minutes or 10 minutes, but it's not. There is a lot of details. When I discuss, I don't really make shit basic. I try to make it as basic as I can, but it's so easy actually. But I try to not forget anything. So this is the part 1. Alright, this is part 1, short part. I'm gonna explain the part 2, 3, 4, and 5. If you have any notes about the video or anything, you can just share it on the comment. Thank you for watching.